This week, let me tell you a story about a toilet company. Toto, Toto, it's a Japanese manufacturer. They make bathroom fixtures, bidets mostly. If you ever used one in a hotel in Asia and wondered why you ever go back to regular toilet paper, that's their product. It's heaven when I first started using them. Anyway, they've been making bathroom equipment for over 100 years. Not exactly the first name that comes to mind when you think about the AI revolution, but Toto's stock price is up 46% this year. Turns out they're the world's second largest supplier of electrostatic chucks. It's a precision component used in flash memory chip manufacturing. AI needs memory, and memory needs electrostatic chucks. Think of it like a magnet, but for a wafer, like those wafers that semiconductors go on. When you're making a chip, you need to hold a wafer completely still while you carve microscopic circuits onto them. And the wafer is incredibly thin and fragile. You can't just clamp it down because any physical pressure would crack it or contaminate it. So instead, you run an electric current through a specially made plate. And that current creates a force that holds the wafer flat without actually touching it. It's like levitation, but through electricity rather than magnetism. And the reason Toto can make them is that the material you need, ultra pure, ultra hard ceramic manufactured to impossibly tight tolerances, is the same material they've been perfecting for over a century. I mean, ceramic, it's what you make toilets out of, right? So the toilet and the chip factory have the same dirty secret. Both need really, really good ceramics. So I guess the global economy is now going down the toilet. Jokes aside, let's look at what's actually happening in Taiwan because the numbers this week tell a different joke, a different story, and it's not the one that everybody is celebrating. Hi, you're listening to Beyond the Reefs, a show produced by Radio Taiwan International. Here we talk about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation. Before we get to the meat of the show this week, here's what's been happening in Taiwan. Last week we talked about energy, about the cost Taiwan pays when someone else controls the fuel that runs the world. Well, this week, that story got a market reaction, a very big one. Taiwan's manufacturing PMI, that's the index that measures factory activity, rose to 60.3 in April. Anything above 50 means expansion. So 60.3 is the seventh straight month of growth. The service sector PMI came in at 58.3. Still pretty good growth. The 14th consecutive month of expansion, in fact. On paper, Taiwan's economy is, again, firing on all cylinders. And then on Monday, the Taiex, that's Taiwan's benchmark stock index, broke 40,000 points for the first time in history. A single day gain of 1,700 or over 1,700 points, the largest daily point gain ever recorded. Foreign institutional investors poured a net of roughly 2.1 billion US dollars into Taiwan's listed shares in a single session. Now, Taiwan's stock market is already outsizing that of the UK and Canada, and now it continues to grow. Taiwan's foreign exchange reserve, on the other hand, topped 600 billion US dollars. The central bank had to intervene to stop the NT dollar from rising too fast. So, all good news, all real numbers, all pointing in one direction, and yet something's hiding underneath, and that's what we're getting to today. So let's start with that 40,000 number and what it actually means. The Taiex crossing 40,000 points is a genuine milestone. It's not a fluke, it's not a bubble in the conventional sense, at least not yet. It reflects something real, that Taiwan sits at the center of the most important industrial build-out in a generation. The four largest U.S. cloud companies, Google, Amazon, Microsoft and Meta announced a combined capital expenditure of around 725 billion US dollars for 2026. That's up 77% from 2025. They are building data centers. They are buying chips, and they're buying the servers that run on those chips and the cooling system that keep these servers from melting. Oh, and the memory that make these chips useful. And almost all of it runs through Taiwan's supply chain in one way or another. TSMC alone accounts for over 40% of Taiex's total market value, which is crazy to think about, that this one company is almost half of the country's stock market. When the four biggest tech companies in America announced that they're spending $750 billion on AI infrastructure, $750 billion, roughly the combined GDP of Sweden and Austria, TSMC, of course, benefits and the stock prices go up. TSMC goes up, the Taiex goes up. The headlines say Taiwan is booming. And in one very specific sense, well, Taiwan is booming, but 40,000 points isn't a weather report for the whole economy. It's a thermometer held up to one part of it. So here's what the index isn't telling you. On the same day the Taiex broke 40,000 points, Formosa Petrochemical, one of Taiwan's largest industrial companies, fell over 4%. The refinery conglomerate keeps Taiwan's plastic, fibers, and chemical industries running, had been operating at 43% capacity in April. Not because of bad management, but because, crude oil shipments stopped arriving when the Strait of Hormuz was blocked following the U.S.-Israel strike on Iran in late February. We all know the story. A supertanker finally docked at Miaoli port last week, carrying 2 million barrels of Saudi crude, the first significant delivery in weeks. And the company is projecting that utilization will climb back to 60% in May, about 80% in June, and then growing. But at the same time, housing transactions in Taiwan's sixth largest cities dropped to an 8-year low for April. That's people buying houses, down 14% from a month earlier, down 7% from a year earlier. Taipei alone fell nearly 18% month to month, and understandably so. Taipei has the most expensive real estate. Some people don't have the money to pay for it. And Taiwan's CPI rose 1.74%. That's Consumer Price Index, the price of everything in a basket, driven by energy costs, dining out, and rent. Not dramatic, but the direction of travel matters. So you have record stock market, near record manufacturing PMI, strong export numbers, and simultaneously an energy sector running at less than half capacity and a housing market at an 8-year low, and household costs quietly rising. So think about all of these numbers. This is what economists call a K-shaped recovery. The line splits. One group goes up, another goes sideways or down. And the overall number, the composite index, the headline figure, if you will, looks fine because the top half of the K is rising fast enough to pull the average upward. The Taiex at 40,000 is not telling you the whole picture and where all the weight is sitting. Korea is living the same story and trying to write a different ending. Samsung just crossed $1 trillion market cap. That's only the second East Asian company ever to do so, after TSMC. SK Skynex, Korea's other major memory chip maker, is riding the same wave. Korea's stock market has now officially taken over Canada to become the world's 7th largest. Taiwan is 6th. A year ago, neither country was in that conversation, so AI definitely rewrote the table. But here's what Korea is doing that Taiwan isn't. Samsung and SK Hynix are actively pushing their consumers to sign 3 to 5 year long-term supply contracts for high bandwidth memory. Some are pushing for 10-year deals. Why? Because they've been here before. Korean memory chip makers have lived through the consumer electronics boom-bust cycle for decades. Smartphones, chip, memory demand spike, everyone overbuilds, prices then crash, and Everyone loses money for 2 years, rinse and repeat. They know what happens when the party ends, and they're trying this time to lock in the good time before they become bad times. TSMC doesn't need to do this quite yet. TSMC's customers, NVIDIA, Apple, AMD, Qualcomm, don't have anywhere else to go. There's no alternative fab that can produce the leading edge chips that they need. So TSMC has leverage without needing contracts. That's a genuine competitive advantage, but I'd argue that it's also a kind of a blind spot. So Korea's urgency to hedge comes from having been burned before, and Taiwan's confidence comes from never having to hedge. And those two things lead to very different risk profiles. When you're riding an AI wave that, by everyone's admission, has never happened before at this scale, you could get blindsided of things that haven't come, right? So why doesn't Taiwan do what Korea is doing? Well, the short answer is because it doesn't have to right now, because its position in the supply chain is fundamentally different. Samsung makes memory. Memory is a commodity. It's produced by multiple companies. It's interchangeable. It's subject to oversupply. And Samsung needs those long-term contracts to smooth out a market that is structurally prone to crashing in cycles. TSMC makes the most advanced logic chips in the world. There's no commodity equivalent. There's no substitute except its own branches in different countries. So you either use TSMC's process or you just don't build the chip. Well, that's a very strong position, and it's why Taiwan's government has been comfortably doubling down on it. The $250 billion Taiwan-US investment MOU, the largest ever delegation to the select US summit, TSMC's Arizona fabs expanding on the schedule, the entire strategy is deepen the relationship with the customers who need you and trust that being indispensable is in its own a form of security. Now, that logic isn't exactly wrong, but indispensability only protects you while the demand for the things that you make keeps growing. And that brings us to something nobody in the 40,000 headlines is talking about. So here's the thing about that $725 billion CapEx number. A significant portion of it isn't being funded by AI revenue. It's being funded by AI valuations. So Alphabet, Google's parent company, reported over $377 billion in quote-unquote other income in the first quarter of this year. Now, that's not advertising revenue. That's not cloud revenue. That's the paper gains from their investors in AI startups, companies like Anthropic, whose valuation has gone from roughly $180 billion last September to around $380 billion today. The products haven't changed, the market hasn't changed, it's just people's valuation of the company's worth have skyrocketed. So that's not exactly steady income. That's like investment income. Amazon's quote-unquote other income for Q1 was around $160 billion compared to the $27 billion in the same period last year. Microsoft has accumulated over $72 billion in similar gains over the last 9 months. So the big tech companies invest in AI startups. The AI startups' valuations rise, and the big tech companies book these rising valuations as income. But there's no real money coming in. It's just projections or speculations. That income justifies more capital expenditure on data centers and chips, and the AI startups use the investment to buy cloud computing from the big tech companies, which boosts their revenue, which boosts their stock prices, which makes the next round of AI startup investment look even more attractive. It's a loop that keeps on going back on it, a very profitable loop, but it is a loop, and loops don't grow forever. So I want to be clear, I'm not saying that this is fraud. It sounds like I'm saying that. I'm not saying that demand isn't real. The demand for AI compute is genuinely enormous and genuinely growing. But when you look at where a significant portion of the reported profits are actually coming from, unrealized gains on startup equity, on investment, not on recurring revenue from AI products that people are actually paying for. So again, the market hasn't grown. It's just investors' projection of the valuation of this company. It raises a question about what sustains the loop if sentiment shifts, even just slightly, if people stop believing in the AI boom. Well, on the other hand, Taiwan's labor funds, the pension money for millions of working people, had their single worst monthly loss on record in March. About 12 billion US dollars gone in 1 month when a Middle East conflict hit global markets. That's how quickly things can change. And we're talking about people's retirement money. They recovered in Q1 overall because January and February were strong, but the vulnerability was real. These funds are now 43% in domestic assets, 57% in overseas market. Those overseas market are increasingly correlated to the AI trade. So Taiwan's retirement savings are downstream of whether the loop keeps spinning. Talking about the AI loop. And this is the part that makes it genuinely complicated. Everyone knows the loop might not spin forever, and nobody can stop. You got to keep chasing the loop. Now, you don't have to prove that AI will pay off. You just have to prove that you're in it, and then people will project your valuations are growing. Because if you're not in it, you don't have the data, the infrastructure, the supply relationships, or the workforce capacity to catch up later. So this isn't like missing a product cycle. It's more like it's like missing a new era. That's why the White House has pulled together a 14-country semiconductor supply chain alliance, including Japan, Korea, India, Singapore, and the Philippines. And that's why the US and the Philippines are jointly planning a 4,000-acre industrial zone for chip manufacturing and AI supply chain. And that's why Taiwan keeps sending its largest ever delegation to select the US year after year, deepening a relationship that is now denominated in hundreds of billions of US dollars. When the dot-com bubble collapsed in 2001, the fiber optic cables didn't disappear. They were still in the ground. 20 years later, the internet was built on top of them. The investors who funded the build-out mostly lost everything. The infrastructure survived. So the question for Taiwan isn't whether AI is real. It's definitely real. And it's whether Taiwan's economic structures, its labor funds, its property markets, its petrochemical sectors, its household budgets can absorb a significant correction when we realize that AI isn't worth as much as appearing on balance books right now. The Taiex at 40,000 says the race is definitely still on. The 8-year housing lows, the 43% refinery utilization, the rising CPI, those say that not everyone is running at the same speed. Okay, so here's where we land. Taiwan's position in the AI supply chain is real. It's earned. It is not going away. The 40,000 milestone isn't fiction. The investment commitments are on paper and mostly on the ground, but a K-shaped economy is still a divided economy, and an economy whose stock market is 40% one company, whose pension funds are 57% offshore, and whose biggest industrial sector spent last month at less than half capacity. The economy is not as insulated as the headlines suggest. There are holes in it, and they need to be patched up. Maybe the loop keeps spinning. We don't know. Maybe the AI boom just keeps on going forever, and the whole thing lifts together. All right? Rising tide lifts all boats. But tides do go away, don't they? They cycle, or maybe it doesn't. And to quote Warren Buffett, when the tide goes out, you find out who's been swimming naked, or however that quote goes. That question doesn't have an answer yet, but is the right question to be asking. I thank you for listening to the show. I'm Joey Chou. Tune in next week to find out more about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.